screen. Let's go to our dynamics. So we have discussed about tax module in the previous classes about the configuration of taxes, application of taxes on various journals and how to settle the taxes, what happens when we settle a tax. Then about the withholding taxes, configuring and applying the withholding taxes on the vendor invoices, how it is being deducted and what kind of accounting entry it's being posted. Then we have seen quite few reports available for taxes in the tax module. So we thought of discussing about the new module today, fixed assets. So fixed assets. What are fixed assets? Somebody have any definition for fixed assets?
Which has the benefits more than 1 year.
Okay. Assets are the assets that stay with the company for long term, at least more than an year. Okay, that's what you mean to say. That stay with the company for long term. Fixed assets are the asset that stay with the company for long term. Long term means it should be more than a year actually, but it can also be less than a year. Sometimes they'll buy fixed assets and sell them, but the intention is that they'll maintain it for a long term. But unfortunately, they can sell it in between in less than a year also. That might also happen. Okay. So we have two different types of assets in normally in balance sheet or in business: current assets and fixed assets. So current assets are those assets which would normally get liquidated within 1 year of time, like cash accounts, or which can be liquidate to say bank accounts or the assets, then any other short-term deposits if you hold. So those are all the assets. Other than this, we also have these accounts receivables or any other receivables from any customer. So that can also be accounted as current assets because you would normally expect that you would receive them within a short period of time from those people. So coming to fixed assets are those long-term assets that would provide some benefit to the company, or using those fixed assets that the company company will eventually get some benefit out of it. So that benefit is not recorded related to the fixed asset. So they might support for the business activities of the client. Like if there is a vehicle in the business, it is considered as a fixed asset. Company will buy the vehicle. So company will use that vehicle for various purposes, to transport the goods from warehouse to the production unit, or from production to warehouse, or to transport people or the finished goods to the customers. So they can use that vehicle for any purpose. It just serves the lot of purposes in company or provides benefit indirectly. Okay, so that assets which normally provides benefits to the company are considered as fixed assets. So this fixed asset management is a very important topic in accounting and finance as well. So I would say, because we have separate laws as well as classes for it, and accounting standards for maintaining fixed assets. How do we have to maintain them? How much value the fixed assets normally possess, and how much at which particular rate it has to be depreciated on periodic basis, or I mean in which particular periodic basis again the assets has to be depreciated, like on monthly basis or yearly basis. So everything does have its own rules and standards for maintaining fixed assets. So it again varies from country to country and GAAP to GAAP. GAAP means generally accepted accounting principles, like IFRS, US GAAP, and local GAAPs. There are many in that way. So basically everything that are related to fixed assets can be accommodated in Dynamics mostly. Fixed assets is a very good module in Dynamics. So not most of them who are working as finance functional consultants are aware of fixed asset module, but it provides a variety of options where you can maintain your fixed asset in very flexible ways. So if you learn fixed asset module perfectly, then you can be considered as a good consultant, or that would be one of the reason that you can be in that project, that you know fixed assets very well. There are chances for that kind of situations also. Okay. So coming to the theoretical part, let's finish it. So within fixed assets, there can be two types. One is tangible fixed assets. Other one, intangible fixed assets. So mostly I can categorize it into two ways, tangible and intangible fixed assets. So what are tangible fixed assets? Anyone?
which can be seen and touched.
The fixed assets which have physical existence can be seen and hmm. So the fixed assets which have physical existence, which can be seen and touched, are considered as tangible fixed assets. So for some examples for tangible fixed assets are like vehicles, which are which have their physical existence, which can be moved and touched. Then machinery, furniture, and land, buildings, anything. So it would be like this: vehicles, machinery, furniture, land, buildings, all the physical assets. What is meant by intangible assets then?
Something which cannot be touched, but still it exists. For example, goodwill and reputation.
Correct. The fixed assets which we cannot touch, or which do not have physical existence except on paper, right? So what are these kind of assets? So what are the few examples for this? Goodwill, patents, okay,
Intellectual rights
Copyrights,
also.
copyrights,
trademarks,
yeah, trademarks, copyrights, all same.
Intellectual rights.
Yeah, kind of. What are the rights that you possess?
Yeah.
For formulas or any other patents, anything normally comes under intangible assets. There is also other intangible asset called as software. So software is also an asset, right? You can't, you can buy it as an asset and use it, but you can't touch it. Is also, but mostly they'll, I mean, doesn't really fall into this category, but it is an intangible asset as well. So it was on paper, so but software is normally in some folder usually. And this could be the kind of fixed assets we have. We also have financial assets. Normally in investment companies, it would be a common scenario. Financial assets means nothing like long-term deposits, bonds, funds. So in that kind of companies, fund management and investment companies, so they have this financial assets like bonds, deposits, or any other receivables that they give it for a long term. So they have it. So mostly on these financial assets, they doesn't really have depreciation and all until and unless they lose everything. So they mostly have this dividends on returns or interest that they would receive from the money they have given or that they have invested in a project, suppose. So that would be financial assets. So let's not focus much on this. Let's focus on this tangible assets and intangible assets. So these are the variety of fixed assets we have in business. And they again changes from country to country. If they have any other pattern, they can. Okay, and for each different category of fixed assets, Companies Act of India and then the Tax Act have decided different tax patterns, how the, I'm sorry, not tax pattern, depreciation patterns, how the depreciation has to be deducted on the fixed assets on periodic basis. and then how they have to be maintained on a monthly and yearly basis. So that will be defined in the acts. So according to those acts, like in India, according to the Companies Act and the Tax Act, they maintain a single fixed asset in two different ways. We have that uh, feasibility in fixed assets model in Dynamics to maintain a fixed assets in various different ways. Single fixed asset could be maintained in multiple ways. Okay, so if this is clear until here, let's talk about one of the important topic in finance only called as depreciation. So what is depreciation?
Value going down into one like tear and wear and prolonged usage. The value comes down, right? That's it.
Okay, so as Bala said, when we keep on using these fixed assets, the value of the fixed asset will decrease in the market. So if you are buying a vehicle for 1 lakh rupees today, you can't sell the same vehicle for 1 lakh rupees tomorrow. The value of it will get decreased eventually according to the usage of the vehicle. Since you have used it for your business purpose, it's a used vehicle and it will be a second hand vehicle and it will have less market value compared to the base value when what you have bought it for. So it would be the same for machinery and furnitures as well. If you keep on using them, the value of them will gradually get decreased. That reduction in value of fixed assets because of usage or damage, anything could be considered as depreciation. So if there is any reduction in the acquired fixed asset because of usage or damage of the particular fixed asset, and if you reduce the value of the fixed asset, that could be considered as depreciation. Okay, and normally depreciation is reduced on tangible fixed assets only. Depreciation is reduced on tangible fixed. On intangible fixed assets, we have another term called as amortization. So amortization is more or like depreciation only, but for on intangible assets like goodwill, patents, and copyrights, we normally have amortization instead of depreciation. So it is also like reduction in the value of fixed asset only, but intangible fixed assets. Okay. So mostly these vehicles, machinery, furniture will get depreciated. But coming to land and buildings, for them, do we need to depreciate? So anybody have any idea for land and buildings if they will be depreciated normally?
I think I assume I'm not sure, but I feel like there may be some sort of depreciation.
There would definitely be a depreciation on land and buildings as well. So it would be 10% depreciation according to India Tax Act. So I mean straight reducing 10% balance method. But on land and buildings, normally what happens is, so you can represent your current or the bought value of the fixed asset. Like if land was bought for some suppose like 1 acre of land was bought for 12 lakhs, let's assume. So you can still represent the land value as 12 lakhs only as long as you go. But there will be a situation when you might have feel like revaluating your land. So now the current value of the land is like 20 lakhs, not 12 lakhs. So you can revalue your fixed asset and increase the asset value or write up the asset value according to the market situation. So that mostly happens with land and buildings only. Okay, write up the asset value will mostly happen with land and buildings or any other immovable assets if they have any market fluctuations accordingly. So that can be for those fixed assets they can be revalued and value can be written up. So that's what we call as depreciation. So depreciation is compulsory to be calculated on fixed assets. Okay, it's a compulsory reduction that has to be done according to the acts. So whoever maintains fixed assets, so they have their own equations how the depreciation has to be reduced according to their requirement. We have to configure the depreciation profiles. Depreciation profile generally guide the calculation of depreciation on a particular fixed asset or a series of fixed assets. So how much depreciation value, how it have to calculate. So everything will be there in the depreciation profiles, which we are going to discuss now. This is the primary configuration depreciation profiles in So these depreciation profiles will guide you through different depreciation methods which can be used in dynamics and which can be applied on different fixed assets according to their nature and according to how the act want the business to follow it. And we can see the different methods in the depreciation profiles though. So this is would be our first configuration that we are going to discuss in dynamics, or we are going to configure in dynamics now. So is it clear until here for all of you? So you might be aware of, the people who are from accounting background and finance background should be aware of all these concepts before I would explain you. But I just want to remind you so that later you won't feel any confusion while I was doing the configurations and accounting. Clear, right? Saideep, Santosh, Bala.
Yes, yes, bro.
Yes, yes.
Yes,
Okay.
Jitin.
Sushila, I didn't hear from you today. Okay. Perfect. Then we will discuss about this one, depreciation profiles. Okay. So depreciation profiles is a configuration that we find in fixed asset module. So under setup, I can see depreciation profile, fixed assets, setup, depreciation profiles here. Fixed asset, setup, depreciation profiles. Click on depreciation profiles. So there are quite few depreciation profiles. Is it our legal entity that we are using daily? Hello,
Yes, yes, yes.
Yes,
MRF,
bro.
right? So why is the
Yes.
depreciation profiles created here already? Not sure. Give me a second. Yeah, I'm sorry. So one day what happened was I have supposed to take a morning batch in ADS legal entity. So for teaching them, I just forgot and opened this MRF legal entity and taught this depreciation profiles in it. Later I changed it to another legal entity. Anyway, I'll just delete them and show you once again, no problem. Okay. See, we have some standard depreciation methods suggested by the acts on the GAPs. GAPs means Companies Act and Tax Act, as well as the GAPs like generally accepted accounting principles have suggested different methods of depreciation. So if I click on you to create a depreciation profile, I can create a depreciation profile. The main thing is that which method you are selecting for such depreciation profile. So what is the method? So I can see different methods: straight line service life method, reducing balance method, manual method, factor method, consumption method, straight line life remaining, 200% reducing, 175% reducing, and I have different methods. So how each of these methods works, or how the calculation will be done in each of these methods, for this we have a good documentation. I'll just take you there. Depreciation methods, Dynamics 365. Here I have depreciation methods and conventions. So this is yeah. Here I have this one, depreciation methods. So these are the both conventions which we'll discuss later in the course. So in this I can see these are the depreciation methods: straight line method, reducing balance method, manual, factor, consumption, straight line. In India, we mostly use straight line service life depreciation, means straight line life remaining method actually, either straight line service life or straight line life remaining depreciation according to the Companies Act. And according to the Tax Act, we normally use reducing balance method. So how each of the methods work, I'll show you now. I mean, I can't show you all of them. You can go through all of them, but I'll show you a few of them which were very important. So let's go for straight line service life method, in which you can see how depreciation is being calculated. Here is the example. So this example portrays that, so asset was bought for 11,000. Okay, the acquisition value of the asset is 11,000. Salvage value of the asset is 1000. Salvage value means the scrap value that they want to remain without depreciating. They only want to depreciate 10,000 only. Out of the 11,000 asset that they have bought in, they want to keep 1000 as a aside as scrap or salvage value, and the depreciation is applicable on only on the 10,000 value. So I can see the depreciation base is 10,000 after reducing the 1000 value. So the service life of the asset is given as 5 years. 5 years will be the service life, and again the service life of a fixed asset is can be decided by the act only, the whichever act that you are following. So according to the act, if for electronics we have a service life to maintain, and for vehicles you have one, for land and buildings you have one. So strictly you have to follow that service life pattern only. Okay, and this is the yearly depreciation, and I'll show you how the yearly depreciation is calculated in this regard. Okay, so let me take you to this sheet where we were discussing. So the first line, straight line service life method. If I just take it down, so asset is bought for, or asset is acquired for, asset acquired for 11,000 according to that example. In 11,000, depreciation, I mean the salvage value or the scrap value. Salvage value or scrap value is 1,000. Okay. So which means depreciation base, or the as how much of asset value has to be depreciated. So that's what called as depreciation base. Base amount for depreciation is 10,000. So you will reduce that to 1,000. You will keep it away without depreciating it. Okay. Then you will depreciation base is 10,000. So now how depreciation is calculated is you have this service life, right? Service life you have for 5 years. So in under straight line service life method, normally depreciation is calculated by the base value of the fixed asset by the service life. So every year the same amount will be reduced. Suppose the base value here, right? So this is what called base value divided by service life, which means 10,000 divided by 5, 2,000 any year, right? 2,000 per year. If it is for 5 years, complete 5 years. So divided by 5 means 2,000 per every year. So every year 2,000 will be reduced from the fixed asset. So in the first year 2,000 will be reduced. The asset value will become 8,000. 8,000 means 9,000 including the salvage value. Okay. Next year again 2,000 will be reduced. Asset value will become 7,000. So that will show up here. You can see in the first year you can see 10,000 divided by 5. 2,000 is reduced from the asset. So you will see 11,000 minus 2,000. 11,000 is the asset bought value, right? Minus 2,000. 9,000 is the net book value of the asset. Net book value means after depreciating the asset in that particular year, whatever would be the net value, that is called as net book value. So for the first year 2,000 depreciation is calculated and deducted. Second year same 2,000 and you can see 7,000 here. Third year same 2,000 and you can see 5,000 as the net book value. Fourth year 2,000 is reduced and you can see 3,000. Fifth year also 2,000 is reduced and at the end the salvage value remained, the 1,000 salvage value that you have left over earlier, not including into the depreciation base. So that amount is left over here. Okay, that's how this straight line service life method works normally. So it's a very simple equation if you would understand, not so difficult. So any confusion in this one, anyone, or is it clear until here? I mean how this method works.
Clear.
Okay. So this is how normally straight line service life method works. There is also another method called as straight line life remaining. Okay, here I can show you straight line rail life remaining. It is more or less kind of same. I mean the calculation and the amounts will be same, but the equation is different. So the difference in this equation normally make some changes when an asset is when an asset say acquisition is adjusted in between, or additionally if anything is added to the fixed asset, so that would normally get differentiated. As you can see here in the straight line depreciation of unchanged fixed, I mean this one straight line life remaining method. So how this will work is straight line life remaining. I can simply show you with this equation. So see, under straight line life remaining, until here everything is same. Okay, I mean assume that the same as acquisition asset is acquired for 11,000 and salvage value is 1,000, depreciation is 10,000 and service life is 5 years. So the formula is different slightly. Formula will be this one. What is the depreciation base for first year? 10,000. So 11,000 minus 1,000, right? So it's like 11,000 minus 1,000 divided by 5 for the first year. So it will be like 2,000 depreciation. After reducing 2,000, how much net book value I'll have? This is the first month's depreciation, guys. So after reducing the 2,000, how much net book value I'll have here in this
9,000.
place?
9,000.
So 9,000 you will have. In the next year, again it will be the same calculation. 9,000 minus reduce that net salvage value divided by. So here it won't take 5. This time, since it is straight line life remaining, the remaining life of the asset is now only 4 years, right? So it will consider 4 year. So which would be 8,000 by 4. So same 2,000 again. So this time's net book value is again 7,000. So here when it comes to here again 7,000 minus salvage value 1,000 again. So divided by 4, oh, sorry, 3 this time. 3 is because for 2 years depreciation is already calculated. So you only have 3 years life remaining in the fixed asset. That's what we call straight line life remaining. So again you will have 2,000 here because 6,000 divided by 3 is 2,000 only. So you will get how much you will get 5,000 here. So that's how it is equation, as you can see here. Every year you have 2,000 only, but the equation is different again. 11,000 minus 1,000 by 4 by 5 by 4 by 3 by 2, and since it's the last year only 1 year was remaining, so 3,000 minus 1,000 by 1, which is 2,000, and the salvage value is left over at the end of the period or end of the completion of the service life of the asset. After all the depreciation is done, you can see your net book value is 1,000. So that's how this differs from straight line service life method. The depreciation amount will be same, but the equation will be different, as well as this will show different effects when asset value is adjusted in between the depreciation year. Suppose after 3 years of calculation of depreciation, for the next 2 years I have added some acquisition adjustment or additional value to the acquisition. So that will be different. That will be depreciated in a different way here, but that will be different depreciated in a different way here coming to this place. So both are little different in that situation. Other than that, if you're not making any changes, so the amount of depreciation calculated would eventually be the same mostly. So this is the basic difference between straight line service life and straight line life remaining. In India, according to the Companies Act, they will use any one of this accordingly. Life remaining or service life, they have that opportunity to use. Mostly they will use life remaining only, as far as I see.
So, any reason like why lives remaining is actually chosen here?
Um, so to say if there are any acquisition adjustments made in between the years, suppose let's say that fixed asset is bought for 11,000 here. So I have added another 5,000 in between. I have added some development to the fixed asset or anything else, which would eventually increase the asset value. So that asset value will be accurately depreciated in this method actually, in the straight line life remaining method. Only how much life is remaining, according to that fraction only it will consider the deduction. Coming to here, it will consider again the denominator as 5 all the time, right? So that's one change that you can notice. So this method is considered because it would calculate less depreciation comparatively because the denominator gets reduced according to the number of years getting reduced. Got it? So this is one. Other than this, we have one more important method, which is normally maintained in the Tax Act, according to the Tax Act, reducing balance method. So let's see what this reducing balance method is up to. So we have this one here, reduce balance method or reducing balance method, anything is okay. In the reduce balance method, I can show you the example here. So if I say reducing 10% or reducing 30%, so it will reduce the 10% or 30% on the existing net book value of the fixed asset. So if I show you the same example here, so within with a different way, suppose asset is acquired. I'll take the same example here. So asset is acquired for 10,000, 11,000. Salvage value or scrap value is 1,000. Depreciation base is 10,000, right? After removing the scrap value, depreciation base amount is 10,000. Service life of the asset is 5 years. But in reducing balance method, we have percentage. This is compulsory. How much percentage? Reducing percentage. So reducing percentage, I'll say as 10%. Let's assume. Okay, what happens now is, so after in the first year, 10,000 minus 10,000 into 10%, right? So I can say into 10% will be considered, which is equal to 1,000. 1,000 will be the depreciation for the first year. So this is for, I'll just keep it here for the first year. 10% will be the balance. So in the second year, it will be on 9,000. So that salvage value is kept aside. Now the remaining value for depreciation is 9,000. So 9,000 into 10% again. So which will be 900. In the same way, whatever will be the net book value minus salvage value, so that will be used for, out of it 10% will be deducted on every year according to this reducing percentage method or reducing balance method. Every year 10% will be deducted, or if you say 20%, every year 20% will be deducted. Or in this example, they said 30%, means 11,000 minus 1,000, which is the depreciation base on which 30% is deducted, means 3,000 is deducted. If you remove 3,000, you will see 7,000 normally. So again, out of the 7,000, why it's reducing 1,000 again? So it should not reduce 1,000 again. Actually, this example that's given here is wrong to say. So upon the 7,000, after reducing the 3,000, it's normally salvage value is not deducted every year, or it will be normally reduced on the total value. 11,000 minus 3,000 means you will get 8,000, and this should be on 7,000 calculation should be according to me. So it's follow this one. First year you have 10,000, which out of which 10% is reduced, where you have 1,000, and you will have 9,000 will be the net book value of the asset after deducting salvage value. 9,000 into 10%, 900 you will have. Third year, so what will be the third year calculation? Anyone?
1,900.
8,100.
8,100 will be the depreciation base value after deducting 900 from 9,000. So how much will you have into 10% you have? So how much?
810.
8, 10.
810.
Again, fourth year, sorry. So fourth year, again, you will have 8,100 minus 810. You will get some amount. So that will be reduced with 10%. In the same way, for 5 years, that will be reduced for 10%, 10%, 10%. That's all. Okay, at the end, whatever will be remaining, that will be the remaining value on the fixed asset or the net book value at the end of depreciation calculation. That's how this reducing percentage or reducing balance method works. In this reducing balance method, we can give whatever percentage we want, 30% or 40%, 50%. It's up to you. You can give any percentage manually. There are also certain fixed reducing balance methods. Here you can see fixed reducing balance means 125%, 150%, 175% and 200%. Let me take the example of this one, 125% reducing balance depreciation, and how it will work I'll show you. So here, so not mostly in India they'll follow this, not, but we can see this one how it works. See here, acquisition cost of the asset is 11,000. Salvage value is 1,000, which means depreciation base amount is 10,000. Service life of the asset is 5 years. Okay. Yearly depreciation percent is 25. I can see 125 reducing balance method, right? So what it will do is it will divide the percentage amount, total percentage amount by the number of service life years. See, it is 125% here. Service life is 5 years. So the yearly depreciation is 25%, 125 by 5, which will be 25. Suppose if the service life is 10 years here, then the yearly depreciation would have been 125 by 10, which is like 12.5 percentage. So that's how it will work. Let's see the calculation how it works. Here you can see the calculation. 11,000 minus 1,000, which you can deduct it. Okay, 10,000 into 25%, 2,500 is reduced. And you can see 7,500 will be the next depreciation base for the next year. So 7,500 into 25%, 1,175. So it will be reduced in the second year. This will be your end outcome. So again, that on that value again 25%. In the same manner, 25, 25, 25 is reduced by every year. In the existing net book value minus the salvage value, 25% of value is calculated as depreciation and reduced as depreciation every year. So that's how this 125% reducing balance works. So in the same way, 150% reducing balance also will work almost in the same way. So it's like, as you can see, 150 by 5, 150 by service life of the asset. So 150 by 5 means 30%. So every month you will have, sorry, every year you will have 30%, 30% reduction. In the same way, 200, 175 and 200 also will work in the same way. If you select 200, 200% divided by 5, where you can see 40% every year. So it's like that. If you have service life as 10 here, suppose 200 divided by 10, reduction of 20% every year. So that's how it works. So these are the few important depreciation methods we have. So to say straight line service life, straight line life remaining, you can, they might ask you in interview this question, what is the difference between straight line service life and straight line life remaining? You can say that in straight line service life, it normally use the denominator as the total service life of the asset, whereas it comes to straight line service remaining, straight line life remaining, it will use the denominator as the life remaining of the fixed asset for calculation of depreciation. So you can say that. Then you have these four methods. Coming to manual depreciation, yeah, you can give manually how much depreciation you have to do. You can give different percentages as you wish, like 20%, 30%, 70%, up to you. Mostly manual depreciation is used in detecting the damage, like if there is any natural calamity or any, I mean, kind of accident happened in the business or in the factory. So if there is a loss on the fixed asset or if a fixed asset is partially damaged, we can reduce the damaged amount by using this manual depreciation method. How much amount you have to depreciate, that much you can depreciate by using this method, manual depreciation. So factor depreciation actually is a method which normally doesn't really be followed by anybody. But in this method, the depreciation calculation depends upon different factors or different conditions. So you can go through this depreciation profile once. In this method, we have two methods again, progressive depreciation and degressive depreciation. In the factor method, you can go through this once, but it's not so important. Coming to consumption depreciation, consumption is mostly applicable on consumable goods. Consumable goods like, petrol or any other perishable goods, what we call. So if you have such kind of perishable goods, there can be chances that you can use this consumption depreciation. So this is also not very common, very rare. So mostly in the I mean, oil companies, or if there are any food processing companies, mostly they will use consumption depreciation as far as I see. You can also go through this depreciation profile if you want to. So I'll just share you that document where you can see all those depreciation profiles. You have to just scroll down the document, and if you click on one of the hyperlink, it will open you the depreciation methods, how they are calculated, and the formulas and all. So I'll just share you this document with you. So just go through this document. It will be very informative and important. So you would get a good idea about the depreciation calculations according to the method. So okay, how do we configure depreciation methods now? I mean the profiles now in Dynamics. We'll shift to that topic. So here, so I want to configure straight line service life method. Straight line service life, I'll call it as SLSL. Here I have straight line service life. I'll select the name here. Straight service life. Okay. So straight line service life, you have to select the method here. By default, it is showing the same actually, since it is the first in the list. I'll select it. Then depreciation year. So according to which calendar year is, I mean, depreciation has to be calculated. So how system have to consider from January to December. So normally if you give calendar here means it will consider from January to December. Otherwise it will you have the other option called as fiscal. Fiscal means according to your fiscal calendar. So your fiscal calendar means you might have your different fiscal calendar, right? Starting from some other date to some other date, like from March 1st to April 1st to March 31st in India, you can have your fiscal year. Or you can differentiate your fiscal periods in different ways. We have seen it in configuration of fiscal calendar. So in that manner, if you have to calculate the depreciation of fixed assets, usually they don't follow. They'll normally follow either the January to December calendar, or according to the fiscal calendar, monthly basis only. So they will design a separate calendar for fixed assets also. We can also do that, and we can link that separate calendar. I'll show you how to do that. So you can give in that way, or you can normally give calendar, and you can select on how frequently depreciation will be calculated: yearly, monthly, quarterly, or half yearly. So most common selection would be monthly in straight line service life method, or yearly sometimes to the someone who have want to maintain it yearly, mostly monthly. Okay, calendar year means starting from January to December, it will consider as an year for fixed asset. Okay, fiscal, if you give fiscal means you will additionally have either yearly or fiscal period, only two options. So you can say yearly means for the total fiscal year, starting from any date to any date as you defined in the fiscal calendar. So again, that fiscal calendar you normally assign in the fixed asset group, or books will show you. Period frequency, you can say fiscal period means according to that calendar, whatever you designed in the Dynamics, according to that calendar, system will follow the depreciation calculation. That's how. So normally it will be calendar, and monthly I'll select here. Okay, and save it. So I can create straight line service life. I can create one more, straight line life remaining. Okay, I'll select that method here, straight line life remaining. Copy it, paste it here, straight line life remaining. Then same calendar and monthly I'll select, save it. Then I'll create the third one, which is important, reducing balance method. Okay, reducing 30% I'll say. Okay, I'll just say it in this way, like just give it a code, reducing 30%. So how I can do it is I just give it here, reducing balance here, and I can give the name here, reducing balance 30%. So here it asks me additional column, additional field I can see what is the percentage. So we can say 30%, as you have given 30%, right? So 30%. 30% every year or every month. So normally reducing balance is for every year, not for every month. So select calendar and select year. Okay, full depreciation means it will select this option to fully depreciate the fixed asset when the service life that remains is 0. So at the end of the service life of the asset, it will normally depreciate the asset to 0 norm actually. If there is any balance remaining, it won't depreciate. It will keep that as a existing balance only. Suppose in this example, which we have discussed earlier, reducing balance method. So fourth year, again, it will decrease 810, right? So it will be something like 7,300 or 7,390 something. Let's assume 7,390 or 7,290. Let's assume 390. Again into 10% you have, which is like again 739. Okay, again that will be reduced. At the end of 5 years, total fixed asset will not be depreciated, right? There will be at least remaining value of 6,000 plus. 6,000 will be remained after 5 years at least. I mean, or at least 5,000 will be remaining. So that will be considered as an existing value or valuable value. But if I say full depreciation means at the end of the year, at the end of 5th year, whatever will be the existing value, like 6,000 will be existing right here after deducting this, that entire 6,000 will be reduced as depreciation and asset value will be made to zero finally after the end of 5 years. Okay, that's up to you. If you want to follow full depreciation, you can follow. If not, it will remain the it will keep up the uh, remaining value after the deduction, after the entire deduction. Most of them will follow full depreciation only, actually. So that's how. If you want only 20%, you can create one more as reducing 20%. It's up to you. So suppose if you have want reducing 20%, you can select the same reducing balance. So copy it and just paste it here. 20%, then 20, then full depreciation. Sorry, I should have given 20 here, not 30. Now it will save. So this is how. Can give any other method like red reducing 125%, right? So just give it. So if you select 125% reducing balance, you don't have to select any percentage. Automatically it will only calculate. So full depreciation is up to you again. If you want, you can, or if not, you can leave it. So this is how. Coming to important one, manual depreciation, which we never use, mostly not use. Okay, and manual method. You can use this one, manual here. So if I select manual, it is asking me depreciation and frequency. Normally it will be yearly only. Manual depreciation is not used at all. Only in the situation of disasters and accidents. If there is a damage in the goods, so it is used for special depreciation. So there is a situation where you can calculate this kind of special depreciations on the damage of goods. For such situations, we can use. You can create your own schedules here. First interval, you can say 50% something, or you can create many intervals, as many intervals as you want. Second interval, another 20%, third interval, so remaining 30%. Sorry, this much. So total of 100%, as you can see. So this, or you can create your own schedules if you want, not only for disasters, but if you want to design your own schedules for fixed assets, you can design it in this way. So now this is for 3 years for suppose, but the service life of fixed asset is 5 years. You can define 5 years depreciation here. So for first year, how much depreciation has to be calculated? 30% first year. For second year, depreciation should be 25%. For third year, depreciation should be 25% again. Fourth year, so it's almost like 80% now. Or you can, for third year, I'll change it to 20%. Okay, enough. 75% I have. So here I'll select 15. In the next year, I'll select 10. So in this way, I can keep every year 30 first year, 25, 20, 15, 10. According to my wish, I have given percentage. So according to this percentage, every year, this percentage amount will be reduced from the net book value of the asset. 30%, 25% like that. So entirely 100% of the fixed asset will be reduced. I can design my own manual methods in this way, in case if I don't want to follow any of the standard methods. Okay, that would be all the important depreciation profiles that we can configure. You can explore more on them going through this document, and you can configure the same here. Okay. So this is how we can configure depreciation profiles and how we can assign the depreciation methods to each profile that we would configure. Excuse me. So straight line service life is here. So what else we have for discussion? Let me go through the course content. Depreciation profiles, depreciation methods, and books and derived books will be the concept for next class, not next. Okay, we'll discuss this one. Fixed asset groups. Okay, what are fixed asset groups? How we can group fixed asset, fixed asset, fixed assets. So you can normally group your fixed assets in, I mean, in business, they can group the fixed assets in any way. However they want to group them, they can group them. Okay. In fixed assets, we have a lot of categories, like vehicles group we have. Okay. Plant and machinery we have, it's a category. And as you can see here, we have this, I told you, right? This one, vehicles, land, machinery, plant and machinery, or you can call it as, or furnitures and fixtures, land and buildings, electronic goods. Okay, electronics you can have, and or you can differentiate the electronics again, like office equipment as well as the electric equipment. Office equipment is something that you use for office use. Electric equipment, something you will normally use for other situations, or in, as cables, or you know, that would become under electric equipment, lights or any fans like that. So fans, yeah. And coming to office equipment, computers, monitors, CPUs, mouse, keyboard, anything that you can create as fixed assets. So you can categorize your fixed assets in according to the nature of the asset. Like vehicles all will be in one nature, right? So bikes, cars, trucks, buses that you have for your company or that your company owns will be categorized as vehicles. Again, machinery means small scale machinery, medium scale, large scale machinery used in various manufacturing of various products, as well as if it is a hospital company, again you will have machinery for various diagnosis and others. Then again, if it is a food processing company, you have for processing machines and packing machines, making machines, anything. You can categorize your machines again, but all of them will fall into machinery only. Okay, some people, how they will categorize or group the fixed assets is according to the depreciation method they follow. Okay, if for vehicles it is straight 10% of depreciation, and for machinery also it is 10% of depreciation. They will group both vehicles and machinery into one group. They'll call it as vehicles and machinery, but not a good practice though. You can differentiate your fixed assets according to the category or the nature of the fixed asset. Anyway, you'll have 10% depreciation on this as well as on this also, but you can categorize them in different ways. Some people will categorize assets according to their service life. So some assets will have service life of 10 years, right? Some others will have 5 years and some others will have 3 years. According to Indian Act, we only have 3, 5 and 10, I think. So, but it changes from country to country again. The service life of the assets will alter. So you can literally differentiate your fixed assets into various groups. So we can also do it here. Fixed asset groups, I'll call it as vehicles group. Then I'll call it as plant and machinery as one group. Furniture and fixtures as one group. Land and buildings as one group. Okay. So all of these are according to the nature I have used the plant and machinery, furniture and fixtures and land. Okay. You can fixed asset groups are really important because each fixed asset that you create will be linked to a group, just like the customer and vendor records that you create were linked to groups, right? Customer groups and vendor groups. So in the same way, we have fixed asset groups which would eventually group all a set of fixed assets into one category. And there are a lot of options available in the fixed asset groups, normally controls and kind of parameters which can be used for controlling all the assets, or we can apply that particular parameter to all the fixed assets within that particular group, or you can run depreciation proposal or acquisition proposals for each set of groups. There are different uh, You can say like options that are available, benefiting options that are available if you categorize fixed assets on the basis of groups. So let me take you to that particular page where you can create fixed asset groups in Dynamics. So it's in fixed asset module and setup only. I can see fixed asset groups here. This one is fixed asset groups. Fixed assets setup only. In the setup earlier we have seen depreciation profiles. We can see fixed asset groups here. Click on fixed asset groups. So I can create a fixed asset group here. Like I'll create one group. MRF vehicles, right? I can give it short names if I want to, like vehicle. Okay, I'll just call it as vehicles. Okay, vehicle is my group name, short name that I give. Then I'll save it. You can give here. So what will be the nature of the fixed assets in this group? Normally tangible, right? Vehicles are tangible. Other than tangible, I can see intangible. Financial assets, as I told you, that bonds, deposit, something. Land and buildings normally fall into tangible, but here they gave a separate category. Goodwill normally falls into intangible, but here they gave another differentiation. That's all. Other means any other things other than this, if they have any. They won't have any, but if they have any, they can use this other. So for this, I'm using tangible. Okay, major type, I can select a top level asset classification for reporting purpose. So major type means I can within vehicles I can have you say major type normally falls into the mostly for reporting purpose only we'll use this one major type to say we can differentiate. I mean plant and machinery and any other equipment will fall into one major, or these are the major one, we can consider them as one major. Vehicles and other electric equipment we can consider as one major, or you can or electronic equipment, if you have a separate fixed asset group as electric equipment and office equipment, you can combine both of them as one major, or you can say you can assign the same major type to those electric equipment as well as office equipment, so that they will be categorized under same major again, or same nature kind of, you can say. But if you have two different groups but which would eventually fall into same major, you can create. So it's not required actually, but you can maintain majors like 0 1. Like you can say like pricing, which is more vehicles would normally price on category 1. Category 1 means like 5 lakhs to, you can say, you can also differentiate in this way: 5 lakh to 10 lakh, worth 5 lakh to 10 lakh into one major. Less than 5 lakh, 2 lakhs to 5 lakhs into one major. Again, assets that would normally be less than 1 lakh will be into major number 3. So in that way, you can differentiate your fixed assets, or you can assign that majors to your group, so that you can also categorize your assets in that way. Like if at all you run for one major, or if want to prepare a report for the assets that are valuing more than 5 lakhs to 10 lakh, up to 10 lakhs, you can run the report for the major actually. You can select the major type and select it. So that will also work. You can literally use this option for anything, not only in one way. You can differentiate your majors of in any way. So if suppose if I do this, I can give major type as 1 here. So vehicles will normally cost more than 5 lakhs to 10 lakhs. So I can give major type as 1. So it can be anything other than this price differentiation. So you can use for anything also, like size of the fixed asset. You can use for that purpose also. Then auto number fixed assets is one I have. If don't use this option, whenever I create a fixed asset that I link to this book, I have to give the manual number there for the fixed asset, like vehicle number 1, vehicle number 2, vehicle number 3, like that. Or if you use this option, you can give a proper number sequence code here, which means if you give this number sequence code, asset number will be picked from this number sequence code. Whenever I create an asset and assign the vehicle group, automatically vehicle number 1 will be taken, or the format that you give here will be taken for the fixed asset number code here. So I'll create that. Let's show you. Go to view details, new. So vehicles. Okay. Shared company MRF. Okay. Segments, I don't want company name, or I could have used company name as well. Uh, that's okay. I'll just add the company name here directly. MRF vehicle. Okay, I'll just keep it like this. MRF vehicle. I'll keep 6 digits. My wish. Or 4 digits if I feel like the number of vehicles that we buy normally does not exceed 1,000, or sorry, like 9,999. So then you can keep only 4 digits, your wish. So or else 6 digits, right? So I'll make it to 6 digits, keep it as continuous and save it. So it's created. I can copy the same, go back and assign the number sequence here, vehicles, right? There is also another option called as barcodes. So you can assign barcodes to your fixed assets that are created or that are bought in. Normally barcodes are assigned for a lot of fixed, when you buy a lot of fixed assets like computers or any other electronic equipment which are issued to different employees. For them we can create barcodes. So unique barcode sequence can be generated and that can be printed, and those stickers can be pasted to those goods or the fixed assets. Suppose if company is buying 100 fixed assets, suppose 100 computers at a time, and they're distributing that 100 laptops to 100 employees. So company can assign barcodes to those laptops, print those barcodes and attach those barcodes to the computer, so that whenever they find that laptop, they can scan that barcode and easily identify that computer. So in which lot it was bought in or when was it bought in, they can see all the other details according to that barcode. So in that way you can use this barcode option. It's not commonly used, but you can use it. You will have different other ways of maintaining barcodes. Not majorly they'll maintain it outside Dynamics, but in Dynamics also you have the option of barcoding the fixed asset that you would acquire. And you have this one, property type. Property type as fixed asset or continuing property and other. Mostly it will be fixed asset. Continuing property mostly comes under buildings, I would say, or if there is any long-term construction that's happening which might take like 5 years or like that, or more, the more the time, that would come under continuing property. If any building that was started and continuing, it will go for another 2 3 years to be completed, or a project that would come under continuing property, but normally it's a fixed asset. And you can give location IDs for fixed asset groups, so in which areas it will be located. But for group location it doesn't really make any sense, but for each fixed asset that we create we can give location, so which means like in which particular location this asset is placed in. Like for machinery or for any other assets you can give, but vehicles we can't say in which location, but they can be assigned to a location, right? Wherever they may run and up, but at the end they will sit in a location. So that location you can update for each vehicle that you create rather than updating it here. GIS layer ID is mostly for buildings and land. So it gives a kind of ID details in which that particular, land and buildings are located in, the longitude and latitude details of that land. So there is a third party tool called GIS database in which you can, which will help you in tracking your properties like lands and buildings, whichever area they are located, like plants, lands and buildings. So you can give that GIS layer ID here. Once registered with that GIS tracker, so using that tracker you can get a GIS ID here, so that whenever you enter that ID in the tracker, it will show you the exact latitude and longitude position of your buildings or the lands that are placed in. That for that only we have some replacement cost factors, insured value factors, so usually used for in the situation of replacement of fixed assets and insuring the fixed assets. So every year if the replacement cost factor changes, for suppose you can update the same replacement cost factor normally. It's a maintaining option. Suppose if I am buying a fixed asset or a vehicle for 1 lakh today, Okay, if tomorrow I want to replace it, tomorrow means next year, suppose let's assume next year if I want to replace that vehicle with a new vehicle, so it will not be 1 lakh, it will be like 1,20,000, which means there is a 20% hike on the market value, or replacement cost factor will change to 20%. So I can give that 20% cost factor difference if at all I want to buy a new vehicle. Okay, so that can change. Again, it can be 10% or 5% or 20%, anything. Insured value means if I'm insuring a fixed asset today for 10,000, suppose, and if the insurance premium will increase or might increase in future, so you can give that 10% increase could be there. It's just an assumption and you can give it. So by giving it here, normally if there is sudden increase, actually you can update for all your fixed asset the insured value factor for every fixed asset within the vehicle group. You can update at a time by having this number here. We have an option or periodic task to run the insured value factor, update the insured value factor on each fixed asset. So that would help. So normally it's not used, replacement cost factors and insured value factors, but you can study on them. You have a good description here. Okay. Then capitalization threshold is one I have. So capitalization threshold is an option where, so if you enter a value like here 2,500, let's assume example. So if I buy any asset and if that asset value is 2,500 or more, then only depreciation is calculated. If that asset value is less than 2,500, depreciation will not be calculated on that fixed asset. If you give depreciation methods also, but depreciation will not be calculated because it is less than the capitalization threshold. Normally, I think so, according to this, but let me see. Enter the amount at which new fixed assets that are based on the fixed asset group are set to depreciate by default. When they are required, for example, enter 2,500 to keep the depreciation field cleared in the books form. When a new fixed asset in this group is posted with an acquisition amount of 2,400, okay, you can change the depreciation information in the books of assets. Capitalization threshold ignored when you acquire fixed asset. No, if when you acquire new fixed asset, if the current capitalization threshold option is cleared in the parameters, okay. Capital threshold in the defined in the form of which asset you can use the amount in the field to create an alert so that you are notified when the acquisition amount is above and below threshold. Okay. Normally, yes, you have given here 2,500, right? So if you buy the fixed asset for 2,500 or more, or if any of the vehicle is bought for $2,500 or more, then depreciation will be calculated on that particular vehicle. And if you acquire any vehicle for less than 2,500, then depreciation will not be calculated on that vehicle. There will be a flag calculate depreciation in the book actually when fixed asset is configured. So that will automatically get disabled and depreciation will not be calculated because that is considered as below the capitalization threshold value. Again, the value that you gave here will be considered only when you enable the parameter in the fixed assets parameters. In the fixed asset parameters, we have one parameter for thresholds normally. So I think I'll show you 1 second. The fixed asset parameters here. Consider capitalization threshold. Where is this? Yeah, here. Consider capitalization threshold. If you enable this parameter, then only that rule will be applied. Here also you have that capitalization threshold option, but this is for all the groups. Again, if you give specific for specific groups, if you give specific values, the value that you give here will be overridden by that groups. Okay, it will consider the value that you gave in the group level rather than the whole company level here. Okay, this parameter, if you enable this parameter, then only that capitalization threshold will work. Or depreciation calculation will be stopped on assets that are acquired less than the capitalization threshold value. That's all we have in vehicles. Okay, there is another configuration. We can link books to this particular groups of fixed assets, which we will discuss tomorrow after creating books. Okay, you can also create one more fixed asset group here as you wish. So there will be at least 4 to 5 in a business or more also you can see. So I'll just create it as hmm, F and F. Okay. Furniture and fixtures. Tangible. Auto number. Yes, I'll create one here. Create new. So I'll just copy the same rather than complicating it. Then go to company. Company MRF. Okay. Just remove the company. I'll give the same pattern here. MRF slash FF hyphen 6 digits. Again 6 digits. Keep it as continuous. Save it. Copy the name. Go back. Assign the name here. You can also upload an image for the group, like furniture image here, but no point actually. I mean, it's a maintainable field as you can upload or remove it. But normally for a single fixed asset, you can upload the photo of that asset if you want to. That is also there. For every fixed asset that you create, you can upload the photo of that asset just to be just to maintain a record. You can upload. So if you click here, normally it will take you to your browse files. So you can browse your images. So I have one truck. I don't know if it will upload or not. It will normally fail uploading in demo environment. Sometimes it will get uploaded, sometimes it won't get uploads. See, it got uploaded. You can see truck here, the image of the truck. So I have it in the folders already. So I uploaded it. If you want to remove, you can remove it from here. Up to you. For each vehicle or for each asset that you create normally, for that also you can upload a separate image as you wish. So that's how you can create groups. And tomorrow we'll discuss more on the other setups. So to say what all we have. Fixed books and derived books we'll discuss tomorrow. Posting profile the next class. I mean, if possible tomorrow itself. Then fixed asset creation. Then how to acquire fixed asset and all methods we'll discuss. One. So it will take at least 5 classes to complete it. The thing that is expected from you is that you have to follow the class properly, and the most important thing is understanding the accounting impacts of each transaction that we do in fixed assets. When acquired a fixed asset, what is the accounting entry or the financial impacts? When depreciated, what is the entry? When sold, what is the entry and all? So you have to be very keen in identifying this and taking it into mind. Okay. So as a finance functional consultant, you should have that good idea about how fixed assets are maintained and how how the accounting impacts occur when you do a transaction with fixed asset, might be any transaction, acquisition or adjustments or depreciations or sales of fixed assets or scrap of fixed assets, anything. I'll explain you in detail, but just try to follow it and do more practice on fixed asset. Don't keep pending on fixed assets because you will get confused when you keep pending of fixed assets. You can't relate one topic to the other if you keep pending. Okay, that would be all I would say for today, and we'll meet in the next class. If you have any doubts, you can stay back and ask. If